I'm going to go for some comments or questions with my live class right now on what I'm talking about, because we need to help people. I want to be open about the topic in general. If anybody wants to ask a question or comment on what I'm saying. Integrity of design. Am I making sense on what I'm talking about? Does this make sense?
Sorry, I just joined in. I just joined the conversation there.
Yeah, no worries.
The method, I was just going to say, from what I know about so far, since I've been a member, the method is different from what the other groups have to say. And it's circumventing, it saves you a lot of time because the process just is more logical. Even though it might work, there's a lot of different ways to achieve the same goal, but I think this method is the quickest route to success. And also it can be verified by the steps that you take. You'll start to see results quicker. I've submitted the same type of document, negotiable instrument, using the green receipt and certified mail and the stamp that's supposed to go to the treasury, all these type of things. Not saying that they don't work, they just do take a lot of time. And in that time, you'll have to talk to people that don't really know this process. And so it's very it can be very frustrating and time consuming if you're not talking to the right people. And for what I know about Creditor Academy, the process is a little different in the way that it goes around that process. They still may give you the same result by discharge and other methods. However, it's more direct, I think. So yeah, I'm totally in alignment with that process for sure.
Yeah, no, I appreciate it. And it really gives people a little bit of hope because, I don't know about your situation, but there's actually people that surprisingly are in tough situations, really tough. And surprisingly, they actually have really great credit scores, but they just don't know how to get access to this unlimited type of credit because there's kind of a method to it in order for talking to the banks and building this credit out. And that to me is the amazing thing when I could see people get access to it really fast. But I appreciate you saying that. Michael B., you've been...
Oh, absolutely. I was just going to add a side note is that a lot of time, just like you said, they're too focused on, sorry for the noise, they're too focused on one method, but that's not to say another method won't work. So they focus too much on the rubber stamp. Oh, it has to be defined this way. Negotiable instrument has to be done this way. But that's not to say there's another method that works equally as well or faster or better or could be done multiple times in a shorter amount of time because they're too focused on that one process, even though there might be multiple methods to achieve the same result, right?
Yeah, it's absolutely true. It's absolutely true. And I hear it all of the time. I hear it all the time. Michael B., I'd love to hear your comments about what we're talking about right now.
I mean, I just love Creditor Academy because you guys teach so many different avenues of getting a result. So if one doesn't work for one people's opinions, then there's another route. So there's multiple ways to do it, and you have all of them available. The cool thing is the way that they're doing with the trade lines and things like that now is that you're actually leveraging an automated system that doesn't have anyone that's really there to kick back to you until you get into like really big levels. So you're just learning how to present yourself so the automated system pushes through. So you don't really have like someone that's going to block your path as long as you do the steps correctly, which is really awesome.
I love that you said that. That might be the most important fact that I failed to point out, that there's no one to argue with. It's just a computer system. Hey, I'm just doing the process. I'm using my lawful administrative procedure, and yeah, it's just a system. It's not even a person. It's just numbers.
Yeah, essentially, yeah. It's really cool. Like the things that you learn, you're just submitting documents. You keep everything in line with what the underwriters want to see, and they just say okay, and you have someone that knows the system well enough to review your current situation and can correct you along the way. And you have like your guide to take you through the credit game, so it's really neat. And then from the asset protection side, after you get your credit and you start doing all your business stuff, you have Paul Michael who can come in there and teach you every in and out of how to protect yourself from people, jurisdictions, creditors, whatever it is. You know, it's like you have multiple avenues. You know, we just had our son, and thank God, I had a conversation with Paul Michael. He has no birth certificate now, and he's in the private.
In the private. I love that.
So it's kind of cool to go down that path. There's some work that's gonna be required, of course, but
Nice.
you know, the benefits are that I have 00 Matthew here, and it's kind of neat,
same with
man.
my daughter. I'm like, you're gonna have such a plush life. I just was like, you got access. Yeah, it's true. It's true.
It's very neat, man. And then we're closing on a house tomorrow at 9 a.m. So it's very exciting. We have all the documents in, and we're getting into a house for less, like out of pocket, it's less than $15K. So $920,000 house.
Charge it on the car.
Sweet, man. It's been a blessing, you know. I wouldn't have had any idea how to do any of that stuff if I wasn't listening to everyone's situations here at Creditor.
Absolutely.
You just pick up different things and you start going, oh, I could do that. I'm in a situation that's favorable for that idea.
Mm-hmm.
And when you have the ability to, you know, do an administrative process, if someone, you know, takes advantage of you, you know, later on in the road, there's benefits to having a house loan go away.
Mm-hmm. Mm-hmm.
So there's some cool things that we can do, and I'm really excited for, you know, everything coming, and I'm excited to learn everyone's progress, man. You guys teach me so much.
Yeah, absolutely. Actually, yeah, my another great thing you brought up. It's not also everything that I teach at Creditor Academy. I learn so much from the students. Sometimes I'll be sitting there and you guys just do stuff. I'm like, wait, you did that? And then we just be in class and be like, yeah, so repeat that again. So how did that go? No, community. It's community makes it work really well. Chris, did you have a comment to say about what you were? Any comments to what we're talking about? Oh, I think your volume is not coming through. Try again. I know that you're talking. I could see that you're talking. For some reason, I don't think your mic is on.
I'm sorry.
Yeah, there you go. There you go.
Can you hear me?
Yep. Mm-hmm.
Is it best to go into the bank and fill out the credit card on paper or do it online?
I like it both ways, actually. Well, I mean, and honestly, the banks give you that option anyway. So I walked into Chase and I got, based off of Ryan's recommendation, the preferred card, and there are other cards after that. And so they gave me at first $5,000, and I actually was kind of complaining. I was just like, Ryan, they only gave me $5,000 on the first card, and he's like, bro, just call them tomorrow. Just say, hey, I want a higher limit. And then they raised it to 15 as soon as I complained. So, and then now that I had it for 15 on the first card, when I started applying for the other bank cards, they just matched the first card. You know, so that's how I built it there. And because Chase gave me those credit lines, I went actually back to Wells Fargo because Wells Fargo was only giving me 10. Now, the thing I don't like about Wells Fargo is they only have one financial product, one credit card. So even though it was one, I said, hey, still match it to what Chase has. So then they put that up to 15. But yeah, Chris, for everything else, besides a couple of banks that I'm a part of, the rest is just online credit cards. I get advertisements for, different ones. The one with the airline miles is good. But if you have a good base, if you can show that you got a good base of credit cards at a high limit, most other credit card companies will match what other companies have already given you. Mm-hmm. Yeah. Just credit card stack from there. Credit card stack from there. The other thing is when you're credit card stacking and you're creating this depth to your profile, it is equivalent to your buying power now. Now, what you could do as a kind of a strategy is you could I was speaking with a representative on this. This is kind of the Rockefeller method, with the IUL. You could take, like, if you start credit card stacking and get it up to a couple $100,000 worth of credit, you could balance transfer that into an IUL, borrow against the IUL to fulfill the debt of what you borrowed from your credit, and borrow a larger number than what you originally invested in for that. So it's basically like it's paying for your death benefit policy, and you're borrowing out of it, and you're contributing to your overall policy for the growth of it. And if you can't pay it back, the death benefit takes care of it. So let me give you an example. You have these two, let's take a smaller number. You have $10,000, right, of available credit. So if you use that available $10,000 and spend it, you own back the bank, right? But if you take the $10,000, put into an IUL, a index universal life investment fund, now there's $10,000 that is now contributed into a savings account, your own private bank, in that IUL. Now you paid for your death benefit, your insurance policy on your life, and it's in your savings account that you can borrow against. So now you can borrow against that amount in the IUL to fulfill the debt of the bank. But the money is still there. The money is still there. And now you can decide if you want to pay back that that loan to yourself in smaller payments, or you don't pay it back at all. That's what I do. I'm like, why would I pay it back? Because just take it out of the death benefit. The death benefit is worth millions of dollars. So, okay, I'm sorry I put $10,000 inside of a little piggy bank that gets to sit there, and that contributed to me having the borrowing power to pay it back. But at least now I invested in a policy that's worth millions of dollars to my family after I pass away. Or maybe the interest rate is significantly lower if I pay myself back, and I could pay myself back in smaller chunks. So maybe I pay myself back that 10 grand across a 50-year period. I can choose to do that. I can choose whatever payment terms I want. What do you think about that, Chris?
Yeah, I like that. And but when you go get cards, so you get two at a time, so they don't run your credit. Like you get a hard inquiry.
Well, they'll do a hard inquiry, you know,
Yeah.
but that's okay because you're getting a bunch of cards. You're applying for credit cards. Like they do credit checks, and you know, it dips it down, dips it up. But I mean, doing hard inquiries in order to
get. Should I apply for 3 of them at a time, though? That's what I'm asking.
Yeah.
At one time.
Yeah. So, I mean, it depends how aggressive you want to go. So I try to apply at least for a new credit card every 3 to 5 days. Every 3 to 5 days. And I'll look at rewards points or something like that. So I always got a new card coming in, and then I just put it inside of I have like this sheet of cards that I have, and I'll put like a sticky note on them for what their cash benefit. Oh, this one's for gasoline. This one's for air miles or something like that. And I might write down the total amount of what that card is. You know.
Yeah. So it won't matter about them going to the bureaus and your hard inquiry. You still just apply for them, huh?
Yeah, just still there's apply for them because you know what? People need cash now. People need access to credit as soon as possible. So, and that's how I am. I don't want to wait for the money, and I don't really want them to, you know, especially now there will be a certain amount of pushback because it is personal credit, right? So personal credit, the question becomes, how much does one individual need in personal credit cards? So I try to push it to a higher limit, and I say, hey, I want $30,000, $40,000 limits on a credit card, and I start going down the line. Eventually, the credit bureaus and start asking questions like, why does an individual like you need this many trade lines, this huge line of credit?
Right.
But if you run a business, oh, it could be millions and millions and millions of dollars. It makes total sense why you need those amount of trade lines.
Get like 50,000 in your personal and then do business.
Yeah.
I got that.
Yeah, exactly. Yeah, if you get 50,000 in your personal, I like to say that that's your rainy day fund. That's your like, oh, if I, hurt my back, if I got nothing else to do, if I got no other option and I just need to coast, there's your piggy bank, right? I have a sister who's really good at saving. My sister, she can penny pinch. She learned it from my mother. So I learned my spending habits from my father. He's like, just charge it. What are you talking about? But my sister, same thing. I was just like, yo, you spent like 5 years to save up $90,000. Like, congratulations for you. But I was like, I told my sister, I'm like, yo, I can make 90,000 in a month, applying for these credit cards. And you're like, well, it's not really yours and you have to like pay it back and da-da-da. And I'm like, it doesn't matter. It's still available cash, just like yours is available cash, right? And he's like, yeah, but you have to pay it back. And I'm like, this is apples and oranges, but I'm going to spend it on something that I can reinvest and it's going to make me money, So yeah, it's just being wise with your spending. That's really all I say to my sister. As I was just like, you're correct. I have to be wise about my spending and you don't. But if I'm wise about my spending as I should be, then I'll yield a better return. Yeah.
Yeah. Because I already been with Ryan already. I already talked to him.
Yeah. Cool deal.
So I'm just waiting to get my credit card because I'm gonna give me a whole back office like you did for the 20,000.
Oh, dude. Oh yeah. Look, you can have 50 staff just like me, man. No, it's the best way to have it. And just having a credit card. And then every time your business earns money, just take that money, put it into the IUL, and then borrow against the IUL, and then spend it for payroll, and then spend it for, you know what I'm saying? Because the business could fail tomorrow. Creditor Academy could absolutely fail tomorrow and whatever. And I'm like, wow, I lost all this available credit. Well, luckily, I still got a piggy bank back here, right? So, yeah. So that's how I kind of see it. Pokemon Go, did you have a comment to what we're talking about?
Yeah, I had something. It got really loud under the overpass there.
Oh, okay.
It was about the paying it back, and so to get a better understanding, you're transferring balances, you're using the IUL, and IUL can take a long time to set up. What is that, like 5 or 6 years to get it where it's at the yields you're talking about, unless you do something massive up front?
You need a good broker, but my broker, you can borrow from it in 30 to 45 days.
Okay, that's pretty incredible. And so then you're really only worried about paying the interest back on it.
Yeah, and it's pretty low interest rate, and but also you set what I love about it is you get to set the repayment terms. So if you want it to be 30 years or 50 years or whatever, you can. And then it's as soon as it's all paid back, now, the savings bucket just went back to the top, You can't do that when you borrow from the bank, because as soon as you pay the bank back, you paid them their high interest rates and you lose that money. You don't have it anymore, right? So it's just better for me to invest credit into my IUL as I see it.
That makes sense.
Yeah. So I'm all about it. And then when my daughter wants the IUL, it'll have everything. It'll have not only all the money that we contributed into the IUL, but now you got the death benefit, which is all the death benefit will then either go back into a policy that she has herself, and she gets what's sitting in there.
That's the natural question with all of these entities. Now, are you doing an IUL, like a policy for each of your employees, so to speak? in that way?
No, because I don't want to benefit them like that. I just want to benefit my family. And
Well,
but
yeah, I was
yeah,
meaning the entities themselves can all have policies in that way, right?
yeah. I mean, I wouldn't, because now you're getting into a lot of premiums. Because remember, life insurance is, you have to qualify for it, and you have to commit
Right.
to a premium. Your premium might be $200 to $250 a month. So you're paying a premium, plus you're putting an additional investment inside of it. So if I had 5 IULs with different death benefits, I mean, the insurance company is going to ask, why do you need this many diversified death benefits for one individual? That's the first question. And then the second thing is why would I commit to so many monthly payments for a death benefit? Yeah.
Okay.
So definitely. Steven, what do you think about what we're talking about?
Now, Paul Michael, you tap into my era of expertise. If you don't mind me chiming in on that particular.
I love it.
So
go for it.
Let's say you have now IUL is not based upon how much you make. It's based upon how healthy you are. It's a life insurance policy. I remember Paul Michael was saying about getting one for your kids. That's a brilliant idea, because kids are what? His daughter is like what, 1 year? Like, she's not even 1 year.
Less than one.
Life insurance policy for his daughter can be ridiculously cheap. So most insurance agents will probably give you, like, because it's a baby, yeah, get a $5,000, $10,000 life insurance policy. Absolutely not. You want to get the biggest kind you can possibly get for a baby, because a premium is going to be ridiculously cheap, right?
Yeah.
Think about it. It's for the life of the baby, not because the baby is 3 months old, right? Oh, it's a small baby, get a small policy. No, it's a small baby, get a huge policy, right? Then on top of that,
right,
you want to get, if you're looking to do what he's saying to do, you want to get an agent who's uncapped, meaning that an agent who does not actually work for a company, because they're going to give you the best product based on what they provide, versus an agent who has a network of insurance companies they work with. They can give you the best product based on what's out there. So it's over 1,000, I think 1,007 different life insurance companies. So pick one, right? Some of them are good at certain areas, like a long-term care, and some are good at IULs. You know what I mean? But at the end of the day, I think a gentleman said something about, well, when you have access to your money. IULs don't work unless you fund them correctly.
Yeah.
I'm saying it one more time. They do not work unless you fund them correctly. So you want to we call it front load them as much as you can. Now, let's say you have $100,000 and you front load the IUL for $100,000. You won't have access to the full 100,000. You have access to majority of it. Okay. And like I said, all depends upon what insurance company you go with. And when we talk about IULs, it's only like a handful out of 1,000 insurance companies that actually have good IULs. I think Transamerica is one, Nationwide is another one. Which one you have, Paul Michael?
I got mine from WFG.
World Financial Group? Okay, I used to work with World Financial Group. So I know
you did?
Yes, I did.
You get the green jacket?
Yes. Yeah, I remember. Yeah, I did all that, man.
You did all that?
Yeah. So World Financial Group.
Room.
Yeah. I'm not even surprised by that. You probably got Transamerica policy or something.
Yeah, exactly.
Yeah.
Like, we're the biggest in the
yeah, and they are, but like I said, they're not.
I know it's a cult. It's a
no all do all. You know what I mean?
Yeah,
but at the end of the day, they can find you the best insurance company for where you're at. Some of y'all might not be able to start off like that. Just get one anyway. You know what I'm saying? While you have the opportunity, because you don't know what tomorrow's going to bring. You may get sick. So when you're sick or have health conditions, it's kind of complicated to get one. You know what I mean? So
it is. It really is.
How did that work when you put it in your kid's name?
As far as an IUL?
Yeah.
It's the same way as if you put it in your own name. So let's say if you got a 2-year-old and you want to now let me back up. So now I'm use Transamerica for example. So for Transamerica, if I want to get a policy for my child, they'll only give you half of what you get for yourself. So for example, if I got a $500,000 policy on myself, well, I can get up to $250,000 policy for my son or for my daughter a piece. Okay. So it just, that's just Transamerica. That's not for every other insurance company. So with that being said, so now I have a Transamerica policy with my kids. Now, if I have one, I probably ain't gonna front mine like I will front my kids. Like I said, the fees are ridiculously low for my kids, so I'll front load their policy. And I probably, well, since we're talking about trust accounts, I'll make the trust the beneficiary of those insurance policies. You see what I'm saying? Versus myself, because the trust can control the insurance policy. Okay, so at the end of the day, when you get those policies, like I said, because the kids are so young and so healthy, it's a huge advantage for you. And let's say you can't front load it, that's okay. Pay the minimum. Just pay the minimum amount on the policy. That way, when you come across a large sum of money, you can dump it into that policy, and that way you can use the insurance company's money versus your money. That's what you're saying. So so you borrow against it, you don't get taxed on it because it's a loan. You don't get taxed on loans. Okay. So you borrow the money against the policy. Your money is still in the policy, earning interest. You just use the insurance company money to make whatever business transaction, pay some bills off, or whatever you want to use it for.
Yeah, absolutely. Steve, what do you have to say about what Steven's saying? I mean, Steven's dropping truth bombs. I love it. I love it.
Yeah, some potent stuff. I'm just curious, what's the difference between an IUL and a whole life insurance policy? Please.
A whole life is okay. So IUL is more flexible, universal, as we call it, universal. It's more flexible. Whole life is for your whole life. So you get one set amount. Your payments does not fluctuate. It stays the same every month. You can put some money in that as well, but they work a little bit differently than IULs. You know what I'm saying? And I think you can put money in it, but it's a set amount. You can't like just put a whole lot into an IUL. They both work the same. I mean, they both are advantageous. They both serve a certain purpose. It depends on what you're looking to do. Okay, so it's not like I don't need that. It depends on your game plan or what you want to use these insurance policies for.
Well, I mean, the movement is saying that, you put money into your whole life insurance policy and then take it out without any percentage, or at least, I guess, interest. And then you're able to put it back at a certain, whatever equivalent time that you choose. And then you pretty much, the only kind of bad thing about it is that it takes away from your death benefit. That's what I heard about a whole life insurance policy. Now, what I heard about the universal life policy, it sounds very similar, but I'm just curious, if our initial goal is to be able to take out that money and then not have any interest on it, do both policies achieve the same thing?
Like I said, it depends on what insurance company you go with. But let's just use Transamerica for another example. Everybody's like, "Oh, I got to pay interest on the loan," right? He's laughing. You know what I'm about to say. So the interest is like 0%. Like
bro, it's like non-existent.
It's like non-existent. So what the insurance company do is like they're trying to make it a way where you can use it as an investment tool without labeling it as an investment. Because at the end of the day, the growth of it is based on the stock market. Your money's not necessarily in the stock market, it's just tied to the stock market. So whatever the performance is, that's how your money grows. Now, if you want to get a loan and they say we will charge you interest off the loan you get, this ain't like credit cards where you get 10, 15 ridiculous, percent loan amount. Okay. Their loan interest rate is ridiculously low. And on top of that, you pay yourself back with interest. You're not necessarily paying them back with interest. They're more like their interest is more like a fee than an interest. like 50 cents or something ridiculous like that. You know what I mean?
So when you don't pay it back, whatever you borrowed, is the only thing that's affected is your death benefit policy or the amount that they give you? Only?
Exactly.
Is that for both the IUL and for whole life?
Exactly. It's spot on. So
are you able to withdraw so much that the policy then gets affected in a bad way?
No. Remember, you can only withdraw now. No, okay, no, hold on. Now, withdrawal and borrowing against is two different things. If you're going to withdraw your money, you're taking your money. You don't want to do that. Right. Okay. You definitely don't want to do that. Keep your money in there. You don't want to take withdrawals. You want to take, like I said, borrow against, not take withdrawals at all. Then that'll just mess up the whole process. As it defeats the purpose of even having an insurance policy.
Right. So I'll take note of not to use the word pay, but use the word set off, almost like the same way in a sense.
I guess so. Yeah. Yes, somewhat. Yeah. So.
Okay, that's fair. I respect it. All right, fine. But what are the so are you saying that IUL is better than a whole life insurance policy?
Never. I would never say better. Remember, they both are products. They both provide. It depends on what you want to use it for. They're very advantageous. Trust me. They're very, I got.
When you're saying that we're going to be labeling it as an investment.
No. It's still an insurance policy. You can use it for investments.
That's what I meant. Yeah.
Yeah.
When you're borrowing the money and then you're labeling the reason being an investment, I'm assuming that's what you're making a reference to.
I mean, they don't. Well, yeah. I mean, you can do that. They don't. The person you're going to talk to don't care what you use it for because it's yours. Okay. They don't care about if you're going to use it for investment or you just pay bills off. It's yours to use it. Okay. And you don't have to. They're not going to run your credit because. Or none of this stuff, because it's not like you're opening another account with Chase or a credit card. This is your insurance policy. Once you get qualified and you're good to go, and they do all the checks, whatever, you're good to go. So when if you call Transamerica or Nationwide, hey, I need to borrow $25,000 against my policy. They say, okay, when you need it, okay, tomorrow, 24 hours later, it's going to be in your account. They don't even care what it's used for.
Now, I'm assuming I would have had to put in that $25,000 in order for me to be able to borrow it, right?
Say that again now?
I would have had to put in that $25,000 into that life insurance policy in order for me to utilize it, correct?
More than that 25. More than that 25.
Okay.
Yeah. But like I said, the object of the game, you wanted to you want to minimize your risk, though. I mean, because let's say if you didn't put it in there and you took the $25,000 and bought some real estate property, and you lose all your money, you just lost all your money. Yeah. Versus you put in an insurance policy, and you take it and you blow it, well, you still have your $25,000 sitting in an insurance policy. You see the difference? So even though you lost the money, you still kept your money and just blew the insurance company's money, and then leveraging your death benefit to pay it back in case you can't pay it back. So it's just another layer of protection for you. Very powerful tool. Very powerful.
So when you're purchasing a policy, I'm assuming you're going to pick out an amount, and whatever, let's say $1 million policy is going to cost you whatever $25,000, just for the sake of the conversation. So you put in that $25,000 for that $1 million policy, and then you're constantly putting in your company's earnings into it, according to Paul Michael, right? Am I?
Okay. Well. You guys think $1 million policy is a lot. That's not a lot. That's really not a lot at all. Because we're talking about your life, right? Yeah. So $1 million policies will be more realistic to be like $300-400 a month or something like that. You mean? Now how much you can put into it depends on how big the policy is. Like I can't get $100,000 policy and then put $100,000 into the policy. That's ridiculous. They're going like, okay, you need a bigger policy. Because the insurance, the policy is the amount. If you have $100,000 in your pocket and you get a $100,000 policy, you don't need that policy. You have $100,000 in your pocket. You know what I'm saying? You usually get insurance to cover everything you got going on, your whole life. So, and they have a way to basically do an analysis to see how much insurance you need and how much insurance you can afford.
Yeah, absolutely. And sometimes it's not even the death that costs the most, it's the long-term care near the end of life.
Long-term care, yes.
I am such an advocate for long-term care. When I was doing home health and I would go to people's houses, and I owned a home health agency here in Seattle. And when Medicare didn't come through for people because it only would cover about 2 hours worth a week of home health care services with Medicare. So people are like, well, 2 hours for grandma. So who's going to take her to her doctor's appointments? Who's going to go ahead and fix her a meal? Who's going to help change her even at home? I mean, that's only 2 hours a week. I have my own busy family and things to do and my own kids. What do you mean that Medicare won't cover it? So then they go to the private side, right? That was just what my home health agency was. So home health agencies charge about $60 an hour for a CNA. Okay. So they would say, okay. So I would sit down with clients and I would say, how much care do you need? And I would do a whole assessment based upon that. And I said, based off of what you're asking, what you're needing, I'm saying that you have about a range of this much care that you require. And they say, yeah, I would agree that I need at least 15, 20 hours a week, or maybe 40 hours a week of care. And I would get them to commit to a number. I wouldn't even tell them the price first. Then when we get to the price of it, I would go and say, okay, we need to do this, 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 and that. So now let's get to the price. It's $60 an hour for a CNA to come in through. Now we get into the negotiating part, which is the negotiation is what can the family help with in order to mitigate the cost? Because they'd be like sticker shocked. They'd be like, oh my gosh, Paul Michael, that's going to eat all of my savings. That's going to absolutely kill everything that I wanted to give for inheritance to my family. And I said, okay, let's go over option number 2. We can put you in a private assisted living facility or a public state funded one. Well, what's the price difference? And I said, well, it's $15,000 to $18,000 a month for the private one. If you want to live in like an Aegis or a Brookdale or a Bonaventure, and they were like, oh, that's too expensive. What the heck? And I was like, yeah, but they got full-time CNA staff. They're 24/7. They have nurses there. They cook your meals. They do all that. It's like, still, Paul Michael, that's going to rob my bank account. Then I said, okay, then we could go to the state-funded one, which averaged about $6,000 a month. But before you make that commitment, let's go on a tour. And then we would actually tour the facility. And they'd be like, I do not want to live here. I do. Oh, my gosh. And it's 2 to a room. Have you ever heard of 2 to a room? If this is your first time hearing it, it's 2 to a room. So you get this little room. You don't get to choose who your roommate is. You're just put inside of a room. They do pair couples that are there together. But if one of the couples needs to go into the facility first, then hey, it's 2 to a room. You don't choose your bunkmate. Your bunkmate could be yelling at the top of their lungs. They could be drunk. They could have just been, coming in and out of the ER. So yeah, Michael B's like, sounds like the Army. Yeah, I know. So you're in that room.
Full circle, huh?
Full circle. So the people that was the greatest clients, not only for me to give them the priority care that we need, but for me to do the billing and feel confident about it, is when I had a client with long-term care insurance, which was like, wow, they can get whatever they want. So I walk in the room, and as soon as they told me, hey, you have long-term care insurance, they are absolutely covered. If they need 24/7 care, they can get it. Doesn't matter what the price of the registered nurse or the CNA is, it's absolutely covered. Long-term care protected the legacy that they are invested in. but you got to get into long-term care insurance early. Just like Stephen was saying about your IULs, it's all about your health and what you can contribute to it. So when you're looking into this movement, when you're hearing about the Rockefeller waterfall method with IULs, you know, I'm here to tell you, it protected the Rockefellers' wealth, but IULs did not make them wealthy. You know what made the Rockefellers wealthy? It's the oil industry and the railroads and all of that, right? It just protected their wealth. They front invested through getting a trust in these IULs, and were able to create that generational wealth. And it's smart for you guys to do that as well. And you're spending money that's not taxed on top of it. I mean, it's just the smart way to go about it.
Hey,
but
I want to piggyback right what you said about the Rockefeller.
Mm-hmm.
Now listen, now during that time they didn't have IUL, but they had whole life insurance during that time. IULs were kind of like something that came out, I think in I want to say 80s or 90s, somewhere on there, right? Mm-hmm. But now just get this now. So if you got all these insurance policies in your trust in the name of your kids or whoever, right? Mm-hmm. So imagine, we're not all gonna live forever, but a trust that can live beyond us. Yeah. So those funds are going to continue on like funding your trust. So the trust will never run out of money. That's just one aspect of it. You see the difference? That's why they're outside of the oil industry and everything else they got going on. Every time a baby is born, they pull up an insurance policy. They try to get the biggest insurance policy ever on the baby, and then the trust owns the insurance policy. So all their children and kids, they can have a nephew who's an idiot, a drunkard, and they may give him $300,000 here from the trust. They can go get you a house, get you your car, and he blow it all. But when he dies, he's gonna put back $5 million back into the trust account. Yeah, all the things he's gonna do. So that's why the Rockefeller method is an genius method, because of the fact that it covers everybody in their whole entire family and then some. So
yeah, and the trust is what gives the stipulations on what is passed out to the beneficiaries. So if they say, hey, if this kid isn't doing anything, if they don't have a job, if they drop out of high school, if they don't want to, they can make criteria through the trust that the trustees have to follow. So then if there is a bad egg, so to speak, they can just say, all right, you get 300 grand, go get you a house. You still family. We still want to hook you up. But in the end, you could have made out big if you would have been more responsible. But really, regardless of that, we're still going to be able to make some money and get a return off of you with your life. So this has been so educational. I love this class. Oh, what an exciting thing. And for all of you viewing us on YouTube, I hope this was educational for you as well. I'm excited about not only what we're going over at Creditor Academy and all the people that we get to meet and interact and have these great conversations with, but I want you to be a part of this community as well. We want to help you get the remedy that you're seeking and looking for, and have a structure, not just a bunch of documents that you're filling out and submitting to different governmental entities and hoping for the best, but having a true structured educational platform to where you can have confidence in how you operate. If you feel like that we are the right choice for you at Creditor Academy, give us a try by just becoming a member. You can go to www.creditoracademy.com and sign up for our membership. It's $69 a month. You get access to Sovereignty 101. You get to be a part of live classes. You get access to modules, lesson plans, questions and answers, community chat groups, as well as the ability to really get to learn about what Creditor Academy's standard is, what my standard is, what my staff of 50 full-time employees investment is in for you. And I gave you all of that right at the beginning with Masterclass, so then you can judge for yourself. We have nothing to hide, and we're very transparent about what it is that we offer and what we could do for you. And you also get access to my classes to where you can ask me questions about our program. If you have not hit the subscribe button or the notification bell, or followed us on Facebook, on Twitter, on TikTok, and Rumble, and all those other things, please hit that subscribe and notification bell. Thank you all, everybody on YouTube, for joining us on a very exciting topic. Take care of yourselves and your loved ones in the meantime. Bye, everybody. Bye-bye. 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 And it's the after hours.